What if your business was one cash flow mistake away from disaster? Most e-commerce businesses don't go broke because they don't have sales. They go broke because they run out of cash. And the worst part is a lot of the times they don't even see it coming. This happens every single day to e-commerce founders, and it's why most startups die before they even have a chance to succeed. But today, we're going to be plotting a different path because I'm going to be showing you a simple system that gives you a crystal clear view of your cash flow. So you know exactly when and where your money is going weeks in advance. And you do not need to be a finance expert to understand this stuff. By the end of this video, you'll have a free tool that lets you predict your cash position with confidence, and I'm going to show you how to use it. Guys, my name is Nate. I'm a fractional CFO and I work exclusively with e-commerce and CPG brands. Today, we're going to be talking about the 13-week cash flow model and how you can utilize it to avoid cash flow catastrophes in your business. So here's the deal. First of all, I'm going to break down the 13-week cash flow model itself. I'll be showing you the exact tool that 7- and 8-figure sellers use to avoid running out of money. Then I'll show you step by step how to set it up so you can track your revenue, expenses, and projected cash flow in just a few minutes a week. Finally, I'm going to reveal the biggest cash flow mistakes that kill businesses and how you can avoid them before it's too late. Once you're done with this video, I can guarantee you that you will be far better prepared than 99% of other e-commerce founders out there. Okay, so let's start with taking a look at the 13-week cash flow model. So the 13-week cash flow model is basically a financial roadmap for the next 13 weeks, or roughly 3 months. What we do in these models is track every single dollar coming into and out of your bank account. And we do that on a week by week basis. So every single week, we're going to have a forecast for what your cash balance should be at the beginning of the week. We'll look at what's coming into the bank account that week, what's expected to leave the bank account that week, and therefore we'll have a forecast for the ending cash balance at the end of each week. That ending cash balance then becomes the starting cash balance for the following week. And essentially all we're doing is that same math 13 times in a row. So why is this critical for e-commerce sellers? Well, there's a number of reasons. First of all is it means no more surprises. You'll know exactly when you have a cash shortage before it actually happens. The second reason is it allows you to plan inventory purchases with a lot more confidence. No more guessing about when you can afford to restock. This model will actually help you figure it out precisely. The third reason is that there'll be no more scaling into a cash trap. You'll be avoiding the number one mistake that a lot of early stage founders make, which is basically overspending without realizing that they're running the business into the ground. Okay, so let's take a step back here and look at how these models actually work. Inside this free cash flow template that I'm going to be giving you later on, there are two main sections that you need to be focused on. The first one is the dashboard here, which will give you a quick high-level view of your cash flow. There's a table up the top here and a couple of charts down the bottom. So this is basically looking the next 13 weeks in the future. And this chart over here allows you to actually zoom in on a single week at a time and understand what is happening during that week. The other tab is really the engine room of the whole model. And this is where we're putting in all of our assumptions and inputs. Okay. So the important period is weeks 1 to week 13 over here. That's the 13 weeks that we are focused on. So within this model, when you get down into the guts of it, you're going to notice that there's 3 different types of cash flow here. The first is the operating cash flow. And this is basically be the cash flow that you generate from providing your core product or service, which in the case of an e-commerce business like yours, basically means that you are receiving funds from the sale of products. So you'll see we've got a Shopify and an Amazon section here. And it's also all of the expenses that are incurred associated with delivering that product or service. So there's a section here which I like to use for the direct costs or the product costs. So these could be your various vendors and suppliers, for example. Then we have kind of the overhead costs, which tend to be suppliers that do not offer payment terms, which is why I call them cash-based vendors. You can organize these however you want, but the categorization that I've offered here is obviously staff, marketing and advertising, rent and insurance, software and subscriptions, professional services, and other. And you can expand all of these to add more detail as you wish. The next section down is the investing cash flow. And this is any money or funds that we are spending on things like new product development or plant and equipment. To be totally honest with you, this is unusual for an e-commerce business to have much in the way of investing cash flow. So I wouldn't be shocked at all if you've got a whole lot of zeros here. The final section is our financing cash flow, which is split into debt and equity. So this is where you would find things like investments from, outside investors, for example. That's obviously going to be pretty unusual, but more common is that you might have debt. So we've got separate lines here for both disbursements from debt as well as repayments of debt. Okay, so let's now talk about some of the ways that you might actually utilize this in the day-to-day operation of your business. So the situations where a 13-week cash flow model is most relevant is number one, if you're a bootstrapped company without a whole lot of cash. Okay, so any cash that you do have is quite a scarce resource and it needs to be managed very, very carefully. This is an incredibly high precision tool to allow you to do that. The second reason would be if you're a highly seasonal business with a very, very large portion of your full year sales occurring in a fairly short time period. For example, during the Christmas holidays. So as a consequence of that, you're going to need to invest a large amount of cash into inventory at certain times of year. And what that means is going to be times of year where your cash flow situation could look very, very different to your profitability situation. And the 13-week cash flow model is a great tool for handling that. The third scenario is really where we have fairly distressed businesses, okay? Businesses that are running into some sort of trouble and have a period of cash flow pressure. Now, in terms of how you actually utilize this model, this is what I recommend. Every Monday morning or every second Monday, if you think that's enough, you basically go to your bank feed and you figure out exactly what expense category every single transaction falls into. If you know how to use things like pivot tables and index and match, they can be quite handy for basically categorizing and cleaning up your bank feed. Now, this recent history of, expenses from your bank feed, the reason that we're looking at that is that it's usually very, very helpful for predicting the near-term future. So take an example like software and subscriptions, for example. If we can see that there's a pattern of, the Klaviyo fee popping up every 4 or 5 weeks, then we can anticipate that, okay, Klaviyo is a monthly payment. We know how to then forecast it out into the future, right? So the next thing that you want to do once you've brought in all of the historicals is basically go through your sales forecasts. If you have a 3-statement financial model, then sometimes what I would recommend is basically linking these revenue forecasts here into the 3-statement model. If you don't, that's fine too. You can just enter the revenue forecasts over here. The next thing that you want to do is go through and review all of the expenses. So like I said, I like to split this out in terms of direct costs or product costs up here, and then all of your indirect or overhead type costs down here. So what a model like this basically allows you to do is anticipate cash flow problems before they arise. And when you have a cash flow problem on the horizon, as we do in this example, you can see that we have a negative cell here. Basically, what this model allows you to do is then go through a systematic process of figuring out how to deal with that problem. And here is my 4-step process or framework that I would usually go through with clients to basically solve this problem. Okay, step one, we need to first of all understand, is there anything that we can potentially do to generate more revenue? For example, could we run a sale, promotion, or perhaps we could try working on our accounts receivable balance if we have one with our wholesale customers, for example. The next thing that we can do is look at our costs. Is there a purchase order here that we could potentially delay? Or maybe we can resize it. Maybe it doesn't need to be quite as many units as what we have here. So maybe this 20,000 could become 10,000, for example, okay? That would solve the problem. Anyway, if we've been through the revenue and we've been through the costs and we've done everything we can to avoid or remove this cash flow problem, then the next step is going to be looking at the investing cash flow. Like I said, it's unusual for e-com businesses to have much going on here. So candidly, it's unlikely this section is going to be the solution to your problems. But if all else fails and we've been through the operating cash flow, there's nothing that we can cut in investing cash flow, then basically the last option that we have to look at is financing cash flows. And we really want to then assess if we can solve this problem, cash deficiency, by some type of financing cash flow. For example, taking out a loan. Okay, so what we've covered today is the 13-week cash flow model. I've explained to you the scenarios under which you can use this model, and you also now understand like the weekly cycle that we go through to kind of keep this thing updated and how we would actually use it to address a real life cash flow problem in our business. The next step, if you want to keep going with this, is to actually download this free template. It's a plug and play model, and it's going to show you exactly where your business stands in terms of cash. Once again, if this is your first time working with forecasting, you can check out my complete tutorial that comes with that download. There's a separate video there that will go through the thing in quite a lot more detail. And if you still have any questions, just leave a comment below on this video, and I'll be happy to help you out. Anyway, guys, that is it for today. Thank you for watching, and I will see you next time.